Investors are always asking you, how do you play the AI theme? What are the ways to play it? It's not just about Mag 7. It's about the second, third, fourth derivatives playing out in this fourth industrial revolution. It's a golden age for AI just beginning. You're gonna have more and more of a convergence. Big tech, energy, how you fuel in the data centers. You're gonna need 6 to 8x the power to fuel these data centers. But it's also, my view, what you're seeing here, that's just tip of the iceberg. You can't just play AI just by owning 2 or 3 names. You gotta play the theme. And that's all the work that we've done around the globe to put together, it's a dynamic list in terms of the AI 30.
Wall Street has received an exciting new strategy for the artificial intelligence revolution, courtesy of Dan Ives, a prominent tech analyst. In a recent significant interview, Ives, who is behind the new AI Ives 30 ETF, declared that we are entering a golden age of AI. However, he's looking beyond the well-known companies like Nvidia. According to Ives, the real opportunities lie in what he calls second, third, and fourth derivative plays, the less obvious winners that will benefit from AI's incredible expansion. The big news is that an estimated $2 trillion is expected to be invested in AI, cybersecurity, and infrastructure over the next 3 years. But Ives offered an even more profound insight that could completely change how investors approach AI. Meeting the demands of this revolution will require 6 to 8 times more energy to power AI data centers. This isn't just a guess, it's already beginning to happen. For example, Meta's significant agreement with Constellation Energy is an early sign of what Ives describes as a coming connection between major tech companies and large energy providers. The situation has now taken a political turn. President Donald Trump has signed new executive orders aimed at reducing regulations and increasing nuclear energy production. With a more favorable regulatory environment, nuclear energy is not only back in the spotlight, but is also at the very heart of the next major investment trend. In this discussion, we'll reveal 3 nuclear energy stocks that Dan Ives has added to his AI-focused portfolio, companies perfectly positioned to power the upcoming data center boom. Let's start with Constellation Energy Corporation, ticker symbol CEG. This company is quickly becoming one of the most crucial foundations in the AI infrastructure boom. While many investors focus on the chips and servers that power AI, Dan Ives is drawing attention to something much more fundamental, the energy required to run it all. That's where Constellation Energy comes in. Constellation Energy is the largest producer of carbon-free energy in the United States, with a vast network of nuclear, solar, wind, and hydro assets. What truly distinguishes this company now is its position at the crossroads of clean energy and artificial intelligence. As major tech companies like Microsoft and Meta aggressively expand their data centers, energy demand is skyrocketing, and nuclear power is suddenly a key focus. In fact, Constellation recently made headlines with Microsoft because they plan to restart Pennsylvania's 3 Mile Island nuclear plant. This symbolic move highlights how urgent and strategically important nuclear power has become for tech giants. Additionally, Constellation is in the process of acquiring Vistra Energy's nuclear and retail businesses. This significant deal is expected to close by the end of 2025. One interesting fact about Constellation Energy is that it supplies about 10% of all clean energy in the United States. This acquisition is projected to substantially boost its energy generation capacity, and it's expected to add about $2 per share in earnings by 2026. Given the soaring costs of building new power plants, especially with tariffs and inflation, Constellation's existing nuclear assets are actually becoming more valuable each day. And let's not forget the supportive government policies. The Trump administration has signed executive orders aimed at easing restrictions and accelerating nuclear energy expansion, creating the most favorable political climate in years. Constellation is also maintaining nearly record-high performance across its nuclear fleet, with over 94% capacity utilization and strong pricing that benefits from a nuclear production tax credit, which provides stability in unpredictable markets. All these factors point to a company that is not just prepared for an AI-powered future, but is actively helping to power it. With significant institutional investment expected and new customer deals likely on the horizon, Constellation Energy is positioned as a long-term winner in the race to fuel tomorrow's data centers. Real quick before we move on, if this is hitting the mark for you, drop a like and hit subscribe. It really supports my small channel. And hey, if you're thinking about retirement or investing in gold, I've got a free guide on gold IRAs linked below. Stick around, I'll go over why it's useful at the end of this video. Now, let's look at another AI-driven energy opportunity that is quietly gaining momentum. Vistra Corporation, ticker symbol VST. While discussions about AI often highlight chips and cloud platforms, Vistra is emerging as one of the most significant beneficiaries of the behind-the-scenes infrastructure boom. Why? Because powering AI isn't just about speed, it's about stability, scale, and reliable energy. And Vistra provides all three. Vistra operates a diverse energy portfolio, with a strong emphasis on natural gas, nuclear, and renewables. This makes it a crucial link between today's fossil fuel-based grid and tomorrow's cleaner AI-demanding energy landscape. With approximately 20% of its capacity now nuclear or renewable, and the rest supported by a robust natural gas foundation, Vistra is perfectly positioned to serve major tech companies building vast data centers. And this demand is very real, as companies like Microsoft Alphabet and TSMC have confirmed their ambitious data center construction plans during recent earnings calls. Vistra's power generation capacity is seen as a vital asset. What truly makes Vistra stand out is its clever hedging strategy. The company has already secured 100% of its expected generation for 2025 and 90% for 2026. This shields it from volatility in energy markets, even as OPEC Plus increases output and fuel prices fluctuate. Vistra's first quarter 2025 results were impressive, with nearly 29% year-over-year revenue growth and a remarkable 53% jump in adjusted earnings before interest, taxes, depreciation, and amortization. These numbers aren't just about past performance, they set a positive tone for the future. Management has reconfirmed their financial outlook for both 2025 and 2026, and analysts have upgraded their future expectations in response. The trends of AI and electrification are not slowing down, and Vistra is capitalizing on this sustained growth. Beyond its core strengths, Vistra's recent acquisition of Energy Harbor further strengthens its nuclear presence, ensuring a cleaner, more dependable supply for next-generation computing needs. As nuclear energy receives more support from regulators and the market, Vistra is no longer just a utility stock. It's really an AI infrastructure powerhouse in disguise. For investors looking to tap into the essential companies fueling the digital age, Vistra deserves some serious consideration. Finally, let's discuss a bold and more speculative opportunity in the nuclear energy sector that's gaining a lot of attention. OKLO Inc., ticker symbol OKLO. While not a typical utility stock, OKLO is making headlines as one of the most innovative companies in the small modular reactor, or SMR, space. Thanks to recent executive orders signed by President Trump aimed at speeding up nuclear permitting and opening up federal land for new reactors, OKLO is perfectly situated to benefit. Unlike traditional nuclear companies, OKLO isn't selling equipment or building massive power plants. Instead, it's developing compact, fast reactors designed to produce 15 to 50 megawatts of power, enough to run a modern data center for decades without needing to refuel. These small reactors are modular, can be transported by truck, and use advanced fuel called HALEU, or high-assay, low-enriched uranium, which is more efficient and produces less waste. The company's approach isn't just about technological innovation, it's about energy as a service, offering these long-term power purchase agreements directly to clients like data center operators. This business model could prove incredibly appealing in a world where AI and cloud infrastructure demand are soaring. OKLO is already taking action, having signed a non-binding 12-gigawatt agreement with Switch Technologies, a major data center developer, and this extends all the way through 2044. That's a staggering amount, and if realized, it positions OKLO to become a cornerstone in powering next-generation computing infrastructure. It's worth noting that one intriguing aspect of OKLO is its focus on microreactors. These are significantly smaller and more versatile than the traditional nuclear plants we're used to seeing. They offer decentralized power solutions, which is quite revolutionary in itself. Yes, the company is still in its early stages of generating revenue and faces significant challenges. There are issues with licensing, capital costs, and supply chain limitations, particularly concerning HALEU fuel. However, it has already completed its first borehole at the Idaho site, aiming for a 75-megawatt plant. That's a pretty significant step forward. Trump's regulatory push is accelerating approval timelines. This means the company might achieve commercial development faster than anyone anticipated. It's a pretty exciting development in the regulatory landscape, to say the least. This stock is not for the faint of heart. It's volatile and speculative, but it's also one of the few publicly traded companies directly addressing the energy bottleneck at the core of AI's expansion. If OKLO's technology proves viable and scalable, the long-term rewards could be enormous. For investors with a long-term outlook and a willingness to take on high-risk, high-reward innovation, OKLO could be a groundbreaking investment in the future of energy. The stock market's been jittery lately, and when uncertainty rises, history shows us where smart money tends to go: gold. Central banks' demand for it last year alone reached a record high, and spot gold just surged past $3,300 an ounce. And recently, it has surpassed the Mag 7 as the most crowded trade on Wall Street. If you're thinking about ways to take advantage of gold in your investments, I found a company that gives Americans a free guide on how to add real physical gold to their retirement portfolio in a way that's simple and secure. No sales pitch, no pressure, just honest, helpful information you can trust. Click the link in the description to get your copy now, because when the biggest financial institutions in the world are quietly stockpiling gold, it's not just a trend, it's a signal.